Welcome to Short View Trading. This is your morning market hit for Monday, 30th of October. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Long View Economics and Short View Trading. And I wanted to talk to you this morning about how to go about trading equity markets on a 1 to 2 week basis. What do you need to look at? What do you need to know? What do you need to think about before you implement that long or short position on equity index futures? The bearishness continued in the US. It was another tough week for equity markets. Key headline indices were mostly down around 2% last week, as you can see on the chart we're putting up in front of you now. In contrast, in Europe, indices actually were broadly flat. But over in the States, if you look at the S&P 500, it's starting to meaningfully break key levels. That's what happened over the course of the last week. If you look at the uptrend channel that's been in place since October last year, we broke decisively below that last week. If you look at the 200-day moving average, similar comments, decisively moving below that level last week. So the S&P is starting to look as though it's entering into a new type of trend. It's broken its uptrend that it had in place over the course of the last year and looking like it's starting a new trend. Added to which, over in the States, the Philly Sox is trying to break its 200-day moving average. Look at this chart up in front of you now. Well, the Nasdaq 100 started to move pretty sharply towards that key 200-day moving average level, which may well become key support, at least in the near term. But on top of that, a bunch of key US stocks, key leadership stocks over the course of this year reported earnings last week. Some of the mega cap tech stocks, the Magnificent Seven, reported earnings and interestingly had very interesting price action on the back of it. Take Facebook, for example. Blowout earnings, very strong earnings, much better than expected, yet the stock sold off the next day, as you can see in the chart in front of you now. That, of course, was triggered by comments by the CFO about challenges in the ad market and therefore worries about the outlook for the likes of Facebook and other companies like it. But there was a bit of a pattern last week in terms of the mega cap tech stocks, not typically on the whole doing that well, despite most of them having okay earnings or indeed good earnings. That in and of itself is pretty telling price action, as we saw with Nvidia a couple of months ago when it topped on its earnings and sold off subsequently by 10-12% over the course of the next month or so. It's an indication that it's an overcrowded trade, it's overowned, and the leadership in the market is potentially changing. Interestingly though, despite all that poor price action in the US, there are some signs that stabilisation on a 1 to 2 week basis is starting to emerge in the stock market, and therefore signs that maybe there's a bit of a long trade for a swing trader who wants to think about a 1 to 2 week time frame. Maybe there's a long trade argument starting to emerge here. Those signs are as follows. Firstly, if you look at the VIX, it hasn't made a new high over the course of the last week. It made a high a week ago, Monday last week. It hasn't taken out that high. Look at the VVIX, which is the volatility of the VIX. Similarly, made its high 23rd of October last week and actually has eased off quite notably since then. That's another sign that markets are trying to find a floor, trying to stabilise. Added to which, outside the States, markets, as I alluded to at the start of this video, in Europe are starting to stabilise, and in Asia they're bouncing. Look at the Shanghai Composite, it's been bouncing over the course of the last week. Similarly in Hong Kong with the Hang Seng. Equally, if you look at the Korean Kospi, it seems to be finding a floor. Looks like it's consolidating its losses and may well be building towards a bounce. And on top of that, if you look at the Nikkei, it's also finding a floor, potentially at around these levels. So outside of the US, there's some emerging signs of stabilisation, supporting the idea that global risk appetite can bounce, which would bring the US markets with it. And then on top of that, we've got very strong model signals, which we talk about each and every day in our daily RAG, our RAG Trader publication, which is available to subscribers or for a free trial if you click on the link below. We're putting up one of those models on the screen in front of you now. It's a momentum of US industry groups aggregated together, measuring all the 20 plus industry groups momentum and scoring them in a scoring system, as you see on the chart in front of you now. It's back on buy. It's been pretty good when it's been on buy on a 1 to 2 week basis, and it's one of many models that are starting to generate a really quite interesting buy signal. So what are we watching today and this week? Well, there are a ton of themes over the course of this week. Firstly, central bank meetings. We have the Bank of Japan. Of course, anything they say about yield curve control would be watched very closely. Then we have the Fed on Wednesday with a press conference from Jerome Powell, and then of course the Bank of England on Thursday. All of those will be critical. It looks as though rates are starting to pause, no more hikes. Will that theme be reiterated and reinforced over the course of this week? That's the first key theme. Second key theme is a ton of US data. It's the big data week for the US. We start the month on Wednesday, 1st of November. So we get ISM manufacturing, we've got ISM services back end of this week, and then of course the payrolls and the ADP employment ahead of that. And then the third key theme is continued US quarterly earnings. The big one this week is Apple, the market leader, critical, sitting on its 200-day moving average, trying to push through it. What are its earnings going to do in that respect? Plenty of other US companies reporting as well, including the likes of Caterpillar. So that's it from us. That's your morning market hit for Monday, 30th of October. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button, follow us, and like and share on social media, or follow us alternatively on Instagram, Facebook, LinkedIn, and or Twitter. Thank you for listening. Stay safe, trade well.